Hello all, Tony here. US equity futures have opened higher this morning, bolstered by news that US lawmakers have made progress towards ending the government shutdown now into its 40th day. The breakthrough on the shutdown, combined with President Trump's renewed pledge over the weekend to deliver at least $2,000 in tariff funded dividend checks to most Americans, has lifted Nasdaq futures about 0.6% after their reopening this morning. Let's take a look at the charts of the Nasdaq and the S&P to see where we are as we start this new week. Okay, so we start with the Nasdaq 100, which actually had its worst week, finishing about 3% lower, a little bit more, which was its worst weekly performance since this sell-off into the April lows. Now, from those April lows, you can see once again we are tracking this Elliott wave, 5-wave advance. Here's your wave 1, your wave 2. This is your wave 3, your corrective wave 4, which bottomed in early September. And what we're seeing now is a wave 5 extension. Now, what we said last week were we were watching for a couple of key levels to break. The first was this uptrend support coming in around 25,250, coming all the way from this April 16,542 low. And you can see that it broke below there. The other level which we were keeping in mind was support coming in around 25,200, 25,000. We wanted to see a break and close below there to really start to increase confidence that potentially we had a medium-term top in place and that a deeper pullback was underway. Now, what you can see here with this candle on Friday, there was a sell-off and then a rebound, and we actually closed back above 25,000. So we weren't able to confirm that the deeper pullback is underway. And at this point of time, as I mentioned, equity futures, this is the cash market. Equity futures trading about 0.6% higher, up around 25,300. So at this point, we do not have that confirmation. And while we remain above 25,000 on a closing basis, we do need to allow for the Nasdaq to potentially rebound and retest this record high at 26,182 and potentially push up towards 27,000. For the S&P 500, we did see a similar candle on Friday. We had this pullback, about a 4% pullback from the high, this 69.20 high, into this 66.31 low. But again, it held or bounced from ahead of this horizontal support we had been talking about for quite a few weeks now. That comes in around 65.50. The low on Friday was actually at 66.30, so about 80 points above those lows we've been watching for. Now, what that means is we still don't have that confirmation that we potentially have in place a wave 5 high and that a deeper pullback is playing out. As I said, about a 4% pullback. What I'd be looking for if we were to break 65.50 would be a pullback closer to 10%, somewhere into this 63.50 support area, potentially down towards 6,200. And then we'd be starting to talk about a pullback around 10%, a little bit more. Until we see a break below this yellow line and a sustained break, which means it's got to close below there and stay below there, then you have to allow for a rebound to retest this 69.20 high, potentially allowing for the S&P to push up towards 7,000 into year end. So they are the crucial levels we're watching again for this week. Some wobbles last week, not confirmed. We'll see what happens as things play out again this week. Thanks for listening and stay tuned for more market updates ahead.